Today on Go Ahead Ask, foreign parties can buy, hold, exchange, and sell real estate in the United States, but they may be subject to federal FIRPTA withholding requirements. And these FIRPTA withholding requirements can significantly complicate doing a 1031 exchange transaction. We're going to unravel that today on Go Ahead Ask podcast.
Building wealth in real estate? Let the Exeter Group take the mystery out of how it's done on Go Ahead Ask.
Welcome to the Go Ahead Ask podcast by the Exeter Group, where we unravel the mystery of real estate. Today, our objective, as always, is to provide investors with better quality educational information so that you can make better informed investment decisions. I'm one of your hosts today, Bill Exeter, CEO of Exeter 1031 Exchange Services, joined by Mark Turok, who's one of our business development officers with Exeter 1031 Exchange Services. The Exeter group of companies includes Exeter 1031 Exchange Services, which serves as a qualified intermediary for 1031 exchanges. They administer all types of 1031 exchanges in all 50 states. The Exeter group of companies also includes Exeter Trust Company. Exeter Trust Company serves as an IRA custodian for self-directed IRAs and individual 401k plans, as trustee for title holding trust or land trusts, as escrow agent for specialty holding escrows, and also provides general custody services. As always, on Go Ahead Ask, we send or encourage your questions, we encourage your topics. So send your questions to ask@exeterco.com or give us a call at area code 619-239-3091. Again, that is 619-239-3091. And if you love Go Ahead Ask, please let us know. Like it, subscribe to it, share it, and even comment and ask questions. We will respond to your comments and questions. Today on Go Ahead Ask, the topic is unraveling the mystery of FIRPTA withholding and 1031 exchange transactions. Foreign individuals and entities can buy, hold, exchange, and sell real estate in the United States, but they may be subject to mandatory federal FIRPTA withholding requirements. Investors who are planning to sell real estate and do a 1031 exchange may have extra complications in the 1031 exchange when they're subject to that 15% withholding. The FIRPTA can significantly complicate doing that 1031 exchange transaction. So we're going to unravel that mystery today on Go Ahead Ask. We are very fortunate today to have an expert on mandatory federal FIRPTA withholding issues to join us and explain how it works and how it integrates or may not integrate with 1031 exchange transactions. So it's my pleasure to introduce Michael W. Brooks. He is a licensed tax attorney and has been for over 20 years. He obtained his LLM in taxation from the New York University School of Law. Michael is a leading lecturer throughout the state of California on the issue of mandatory federal tax withholding on sales of U.S. real estate by non-U.S. parties. In fact, we've seen Michael speak at many, many different escrow and settlement service conferences over the years. Michael is the CEO and president of Directs, which stands for Domestic and International Real Estate Closing Tax Services, a tax firm with the sole focus of helping non-U.S. persons in connection with U.S. real estate transactions. So, Michael, welcome to Go Ahead Ask.
Thanks for having me, Bill. It's very nice to be here.
You're welcome. So first, tell us a little bit about yourself and maybe some of your passions that our listeners might be interested in knowing.
Well, I have been practicing law for many years. I still do a little law. I still do the occasional trust and this or that. But really, all I do professionally these days is help advise non-U.S. investors in U.S. real estate with the selling process, and that usually means are they subject to the mandatory bill, as you pointed out, FIRPTA withholding at the time of sale. If they're a non-U.S. person, they generally are. And then how is the best way for that person to navigate that withholding? How can they either minimize it or address it, and get the withholding is temporary, so how can they get the money back as quickly as possible, that sort of thing. And that's really all I do exclusively professionally, and have for many years. What else? I'm a native Californian. I did go to the East Coast a little bit for school, but I am a native Californian. I grew up actually, Bill, in the Palm Springs area. I'm one of those strange people that actually grew up in Palm Springs, and and that's how I got so heavily involved, by the way, in this area, because Palm Springs is basically run by the country of Canada at this point. So many of the transactions there are with a Canadian person buying or selling, and that's led to a practice where I basically do it throughout the state of California and other states as well, which could be people selling, California U.S. real estate from many countries. The chief amongst them, I would say, is the big two are Canada and China. So that's what I do.
Interesting. It's unusual to find somebody who's both a native Californian and a native Palm Springian. I don't know.
Yeah.
Or is that a Palm Springer? I'm not sure.
It exists. Yeah.
So let's go ahead and unravel that mystery then on mandatory federal FIRPTA withholding issues. Can you explain, kind of on a layman's term, what is FIRPTA and who falls subject to the FIRPTA withholding?
Yeah. Okay. So FIRPTA, the best way to think of FIRPTA is when a foreign person, we can define that in a moment, sells U.S. real estate, the IRS is basically not going to trust that the foreign person will pay the tax to the IRS if they owe one at all. Of course, in real estate transactions, a tax is only owed to the IRS if a profit is, made on the transaction. But at the point of sale, the IRS they don't have an agent there on the ground at the escrow office. They don't know whether the foreign person has made a profit or not. So what they say is, look, we're not going to take a chance that the person moves back to Paris and is then going to send us in, the 30,000 in income tax that they might owe us. So instead, FIRPTA says the IRS, are going to make sure that the foreign person, in California anyway, that the escrow company on behalf of the foreign person withholds an amount of tax that is of such a high amount that it would be almost impossible for the Parisian to owe more than that to the IRS. So what the foreign person is always in the position, Bill, in these transactions of basically having to get a refund, because the escrow has no choice, that's the law, but to withhold this high amount of tax. It could be 10%, but it's often 15% times the gross sales price. That's a lot of tax, and it's usually going into the IRS. There's a couple of exceptions. And of course, I'm sure we'll run through some examples, but there's almost no way 15% of the gross sales price is going to be more than what that person could really owe the IRS based on the net profit. So the foreign person is always in the position of chasing that. I can help them do that. But that way, if you sort of think about it, the IRS is ensuring that they don't get shortchanged any tax that might be owed by the foreign person leaving the country, basically not complying. They don't want to risk that. Yeah.
And who would be considered a foreign person?
A foreign person. Okay, so you would say no to two questions when you're evaluating who is a foreign person. Let's just keep it with individuals for a moment. The two questions you would ask are: is this person, are they either a U.S. citizen? I think that's simple enough. They would know if they're a U.S. citizen. Or B, if they're not a U.S. citizen, are they a full-time U.S. resident? So we have many people in the United States who are not citizens of the U.S., but nonetheless live here full-time. You can think of H-1B, students, investors. There's a lot of examples. They could be considered not foreign persons, because they could be considered U.S. persons by the fact that they live here full time. And as long as they live here full time and basically as of the date of closing have been assigned already by the IRS a social security number, or what's called an ITIN, individual taxpayer ID number, if those two prongs are met, then a person who's not a citizen but still lives in the U.S. full time and has a social security number or an ITIN can be deemed a U.S. person and therefore not a new foreign person. But everybody else is a foreign person. So you see, for example, many people who own real estate in California, United States, who are neither U.S. citizens nor do they live anywhere near full time in the United States, but they still buy and sell real estate here. Those are foreign people. It's about, in California, I read somewhere there's a foreign party, a foreign person involved in about 3% or so of all transactions in the state, something like that. That's who a foreign person is.
Hey, and Michael, our audience would love to know, can withholding be avoided if the seller is doing a 1031 exchange on the sale of property held for rental, investment, or business use?
Right. So what the IRS says is, the regulations say is, more or less, basically the answer is no. They're not going to, even though you could say on one hand, well, it looks to us like there's not going to be any tax owed because the foreign person is going to enter into a 1031, or for all we know, maybe it's already sold, maybe he's doing a reverse, or let's just do the straightforward. They're selling, but they're absolutely planning within the next 6 months, to buy a replacement property. They're going to identify it within 45 days, follow all the rules. You could argue on one hand, well, wait a minute, why are we doing any withholding? This person's not going to be probably subject to, any tax, as long as they buy, as long as there's no boot. But again, if you look at it from the IRS's perspective, that's just talk for them at the point of the closing, and they're not going to want to risk that there is any sort of failure to follow through, or maybe there is a boot component, etc. So the answer is no. There's a couple narrow exceptions I know we'll discuss, but basically you can't get around the withholding requirement just because the foreign person is planning on entering into a 1031. It's still going to be there, and you're going to sort of have to navigate it as you go through your exchange. Yeah.
Good. When can a foreign exchanger apply for an ITIN?
Well, let's put it this way. If you take the example you just told me, where a foreign person buys real estate in the United States, and then, for maybe some period before thinking about selling it, they rent it out, and I would assume are filing annual U.S. tax returns, 1040NRs, to declare their rental income earned in the U.S., then they should have an ITIN already, frankly, going into the sale. That's very helpful, by the way. So for the first time a foreign person, I think in our world, would or should have applied is doing their first tax returns to declare the rental income that, I know there's situations, guys, where they could still be 1031 compliant and wouldn't necessarily have declared rental income prior to the sale. But I think that's a very common scenario where the person would have had a rental. I don't know, from your world, would you even, let's just say they had rental income, would it ruin the 1031 from your end if they didn't have tax returns to show the rental income? Would that ruin it, or would they be able to do it without the tax returns at that point? It
would certainly raise an issue where you're filing or claiming and structuring a 1031 exchange, but you've never reported it as investment property. So
Right.
Certainly that would probably trigger something on the IRS's side, where an investor's doing a 1031 exchange, but there's been no reporting on Schedule E of investment property. So I think that would certainly be an issue.
Right. So in our world, the good news is, and this is different than a lot of the clients I see who aren't planning to do a 1031, is you would normally, I think, see a foreign person coming into the exchange having already obtained, because of the rental, income reporting necessity, an ITIN, and that'll be very helpful as they go into the process. So likely as they go into sale, the ones that are doing 1031s already do have an ITIN, hopefully. And if they don't, let me answer the question. If they don't, for whatever reason, the time to get it is we would apply during the escrow period. We can't do it, guys, if they haven't done it before because of the rental income and now they're selling the property. We can't just go get it for them because we know they need it. It doesn't work that way. We have to wait until they enter into the escrow, and then we have to submit, as part of the ITIN application, some of the closing documents from the sale and so forth. So in the scenario where they didn't have one going into the closing, we could apply at the closing, but they wouldn't get it until probably a couple months after the closing if they didn't have one already.
What evidence must a foreign seller submit to the IRS?
Well, okay, so we're talking about two scenarios where they might have applied in the rental income area. Let's just say they were on the ball, they were renting it out, and they reported. They're going to have to submit with their ITIN application copies of their rental tax returns, declaring their 1040-Rs, declaring the rental income. But they'll also have to submit, guys, and this is tricky. Part of the trickiest part of the application is they have to send in what's called a certified copy of their foreign country passport. And certified copy is sort of a tricky term of art. I mean, they're not going to send their real copy, or they shouldn't, into the IRS where it would sit there for forever. So they have to get a certified copy of the home country passport. Now, if they happen to be in the United States, getting a certified copy is not a big deal. They can call somebody like me. I'm what's called an IRS acceptance agent. I'm hardly the only one in the country. Anybody who carries this title, they could Google, and that person could, as long as they were right in front of them, basically, have a little interview with them and go copy their passport, and we sign a couple things, and that's your certified copy. But so number one is, if you're in the U.S., go meet an IRS acceptance agent in person, and you'll get a certified copy. A certifying acceptance agent actually is the term. But unfortunately, a lot of the people that I deal with, I don't know about your experience in this area, guys, is that person's not in the U.S. And they're getting into this whole thing. Then applying for an ITIN gets trickier. Where to get your passport certified if you're not in the U.S. is not easy. The best way to do it is to take your passport to the U.S., which that nobody wants to do, to the U.S. Embassy, where they will make a certified copy of your passport if you ask them, and then you could mail that to somebody like me who could submit the whole application. But of course, these days, a lot of these U.S. embassies are not open around the world, and that's a real problem. So you can't just go into, in many countries, the embassy is closed because of the virus, or it's got huge waits that nobody could ever wait for. So what I end up doing a lot of, and people are okay with this, is a lot of the foreign investors end up FedExing their passport to me in California, and I'm allowed to make a certified copy if I'm in physical possession of the passport, as long as we have a video sort of hookup with when I'm in possession of the passport. I have to make sure they look sort of like they do, at least in the passport photo. It's not a fraud. I have to touch the passport, that sort of stuff, and make sure everything's above board, and then I can make sort of remotely the certified copy, and then I can FedEx the passport to them. So the trickiest component, guys, in the ITIN application is the certified copy. And what are you going to do specifically if you're not in the United States when you need this ITIN and when you want to apply for it? Then it gets a little tricky.
And I know many states have legislation that's similar to FIRPTA for non-resident sellers of property, but are there any differences that stand out from your experience?
Well, take California. We know California has a FIRPTA-like provision where they want, generally speaking, 3.3 times the gross sales price. But there's a huge difference with California and the IRS, because California is willing to allow the foreign seller to, basically ignore the Cal FIRPTA requirement of sending in 3.3 times the gross sales price at the time of close, provided they stayed on a California withholding tax form that they're entering into a 1031 transaction. The IRS, didn't say that. They didn't care whether you were entering in, or they weren't going to ignore the FIRPTA, the 10 or 15% holdback requirement. California is willing to ignore willing to not to let it go, the 3.3, if you tell them, yeah, we're entering into a 1031 transaction. There is one caveat, though, for that rule, and that is that the foreign individual has to have, as of the date of close, the ITIN or a social security number. Now, again, I don't think that's going to be a problem if they'd been doing the rental returns prior, a couple years prior to closing, no problem. They'll have their I-10 because they would have gotten it when they did the rental returns. But for the taxpayers who, for whatever reason, go into this sale not having obtained an I-10, and now it's our job to get them one, and we can apply it in the escrow period. We're not going to have it as of the date of close. So that's a scenario where they won't be able to take advantage of the California, you don't have to send it in because you're doing a 1031 rule, because they wouldn't have an I-10 as of the date of close. So hopefully, to take advantage, to avail themselves of that nice exception from the California withholding, they would have already obtained an I-10, prior to them even thinking about selling this piece of real estate.
All right. Thanks, Michael.
Yeah.
We're going to take a really quick break here. This episode of Go Ahead Ask is sponsored by Exeter Trust Company, so don't go away. We'll be right back. This episode is sponsored by our sister company, Exeter Trust Company. Did you know that all individual retirement accounts are self-directed IRAs? It's because you choose where to put them. You choose whether to put your self-directed IRA at a bank or at a securities or brokerage firm or a life insurance company. So that makes it self-directed. But did you also know that all IRA custodians are not created equal? Most IRA custodians, like the banks, the securities firms, and the life insurance companies, limit you to publicly traded investments such as stocks and bonds and mutual funds. But some IRA custodians, like Exeter Trust Company, allow investors to invest their IRA funds in other alternative assets such as real estate. Investors can acquire real estate, mortgages, deeds of trust, or tax lien certificates inside the IRA as an investment inside the IRA. To learn more, call Exeter Trust Company at area code 307-222-8750 or visit them on the internet at exetertrustcompany.net. And we're back with Michael Brooks with Directs and discussing the mandatory federal FIRPTA withholding requirements and how it can complicate 1031 exchanges. So we thought what we do now is start off with kind of an example that Michael can walk us through on how it works and how it would complicate the 1031 exchange process. And so, Michael, why don't I turn it over to you, and if you want to lead us through that example.
Sure. Okay, guys, so let's take a foreign couple. They bought real estate in Los Angeles a few years ago, husband and wife from China, I say, for $1 million. And in January 2021, shall we say, they are planning to sell it for 1.2. You can see we've got a little gain there. And they don't like the idea of paying any tax, or at this point, paying any tax to the IRS. So they want to sell for 1.2 and sort of roll that 1.2 into a new, replacement property that'll be at least worth 1.2. And that way they can avoid paying any tax on the $200,000 profit, which might be, if anybody's interested, is a ballpark, something like $30,000 in tax. How did I get there? $200,000 profit, 15% regular capital gains rate. I hope that stays. And that equals $30,000 profit, and they're still not excited about paying the $30,000 profit, so they want to do a 1031. So, and they're planning, let's just say within a few months within the required period after the January 21 sale, to purchase a replacement property, say, just to keep everything simple. They've already even identified it, and they'll be ready to roll shortly thereafter on the purchase. Okay. Now, if they do nothing, special, they're a foreign investor, they're selling for 1.2, it's January 2021. If they don't do anything special, even though they're entering into a 1031 and there's not going to be any tax owed to the IRS, that is not going to remove the requirement that the escrow company in January 2021 send in $180,000 to the IRS, and they won't be able to give it to you guys. They'll just have to be short $180,000. Why $180,000? If you're paying attention here, because they're a foreign investor and they're subject to FIRPTA, and that means 15% times the gross sales price goes in without anything special on their behalf, goes into the IRS at the point of closing. And if it did go into the IRS at the point of closing, we could just talk about for a moment. When would they get that 180,000 back? Because we know that there's not going to be any tax due. They're going to follow through and do a 1031. So the final record should say no tax will be recognized here. So they're going to be entitled to the full refund. But I can just tell you, based on the normal process here, that 180 is going to go in January 2021, and they're going to get the refund middle of summer 2022, if you follow that, because they're not going to be able to do the tax return to get that money back until the next year, and then it's going to take a few months. So that money is going to be sidelined without any special action taken on their part for a year and a half. And then to complete the, so they don't have access, if you think about it, to 180,000 from the proceeds, and they got to go buy a new piece of real estate for 1.2. They're going to have to figure out how to replace that on their own to make that exchange work. They just won't have access under this scenario to 180,000. So A, they're very inconvenienced because they're without their 180,000 for a year and a half. B, they have a new problem. They got to make sure to find a new 180 so they can go buy the replacement property. So full headaches everywhere. Okay, but there is an alternative here, of course, that they could think about and that may help them. There is, guys, what's called the 8288B withholding certificate option. And what that says is, instead of, it takes a lot of planning, you can't just decide to do this on the fly, got to think about this in advance. But instead of at the closing, the escrow company sending in 180,000, instead, somebody like myself, somebody in this field, FIRPTA attorney, a FIRPTA accountant, something like that, would send in this application to the IRS. The application is going to sort of prove top to bottom that this foreign investor is entering into a 1031. And please, IRS, could we not have to send in the 180 because we're entering into a 1031? We're not going to have any tax owed. And what they will do is they will review the application in the IRS. And they will actually, unfortunately, guys, they will actually want to see, at a minimum, a closing, an agreement to purchase. So it won't be enough to just simply, the application could go in prior to the closing, but they will not approve the application based on the foreign investors say so that they're planning to enter into a 1031. That won't suffice. Although we would have to show them a lot of details about what's going on and some of the background information and the, maybe a little bit of the information with the Exeter and all the sort of bells and whistles. We would actually have to supplement that application if we didn't have it at the close with a purchase contract to buy the replacement property. So you're going to have to really prove to the IRS this is happening, not just being thought of. But assuming you do, and they sort of review the application and so forth, they will agree and send a letter to us that we've looked it over. We don't think that, we agree with you. You've said that, this person will not owe any tax. And we've looked over everything you sent in and we agree they won't. And therefore we'll send you a letter saying, in essence, this person is not subject to any withholding because of the ongoing 1031. Now, the sale would have closed. So what would have happened, guys, in the months, and it would be months, while we were waiting to hear from the IRS about this, is the escrow company would have to hold on to that 180,000. They can't give it, if they're smart, they can't give it to accommodator. They certainly can't give it back to the seller. So they would just have to hold it in a trust account while we all wait to hear back from the IRS. And so one other really important thing to consider when you do this stuff is, because an escrow company does not have to agree to do this, and you need to know before you go into these, will your escrow company agree to hold, not send in this FIRPTA tax pending the approval of what's called an 8288B or withholding certificate application? Will they hold it for a few months probably while we all wait to hear back from the IRS? Not every escrow company will agree to that at all. And you need to know in advance if your escrow company is going to say yes, because if they don't and they just send it in, then this whole application's not going to be very effective.
And that's a good point, because we've seen that some of the escrows will just say, we won't do that. We'll withhold the 15%. We'll remit to Treasury right away. Others will say things like, we'll hold for 90 days or 120 days. And then if you haven't produced this certificate, we're going to remit. And a few will hold indefinitely. Are there any guidelines there where they can only hold the funds for so many days before they have to remit, or can they hold indefinitely? Any guidance there for escrow officers?
They must hold it indefinitely. The notion that they're either holding or not holding. If they're holding, it's indefinitely. So for them to say, well, if we don't have the certificate back from the IRS within 90 or 120 days, and if we don't have it, we're going to send in the money. That's crazy, because that will actually inadvertently lead to a big penalty. They won't have a reason at that point to send it in. It'll look like it's just late. So they have to make there is stuff in the regulations where the IRS says we will try to do it within 90 days. And they're never 90 days. You're so lucky. It's just indefinitely, and they have to be good with that. I mean, if I'm running the show, it won't be, forever. It won't get lost, and everything will be fine. But I cannot. Who am I to tell the IRS people how quickly to do this stuff? And I just have to wait, like everybody else, till they get back to us. The escrow company can't get antsy. Just has to hang in there, and when it comes, it comes. Now we are in a bad, guys. These days, it's a bad time too for this, if you think about it, because the IRS is so backed up with the. Because the virus really backed them up in 2020, and they're still sort of playing catch up. So this is particularly, although it won't last, it will go back to normal soon enough. But right now, it really could last, 6 months or something like that, a long time. And everybody just has to hold tight. And I know the window, by the way, for the 1031 might close. I can't promise anybody when we do this that you'll have the approval within the 6 months. That if you need that 180,000, that you can use it. We think you can. In a normal time, you would be able to, but the IRS doesn't. It's not their job to get back to you. You have a 1031. You must hear back from them within 6 months or whatever. It's not going to work. They're just going to get to it when they get to it. So we all have to hang tight. Basically, is my answer. Yeah.
So really the risk there is going to be that they start the process, their sale closes, they have you submit the application to the IRS to obtain this certificate. We're waiting, and they either have to wait till they get the money or wait till they get the certificate so escrow can release the funds to us as the qualified intermediary, or they're going to have to put out-of-pocket funds into escrow to cover the withholding, or self-fund the withholding, or they don't get the certificate. They can't get the money until after 180 days, and so they could still complete their 1031 exchange. But in that example, that amount withheld becomes taxable because it wasn't reinvested.
Yeah, I think they're going to have to go into this planning to have, even if they're using me, I think they have to have backup funds, replacement, whatever you want to call it, at the ready, because there's no matter what the IRS says, we can't make them do something within a certain time. We can't do it. I've done 1031s, guys, many times, and they've gotten back to us on month 4 or something like that. And the foreign investor absolutely has been able to use the funds, the very funds being held by escrow. The certificate came in. The purchase had not gone through yet. Escrow's routes were released. They release it. It's well within the time frame, and everybody's happy. But you cannot hold them. The IRS doesn't care, basically. And they got their own, the manpower and backup problems. So they're just, if there's a way to put it on a, VIP line, I'd like to know, because I just don't know how to get it in front of, somebody fast. Everybody wants it quickly. Yeah. So
if they would just come out with a VIP line, then we'd be in great shape.
Yes.
We would love that.
Hey, well, look, they're always looking for revenue. How about a premium you could pay to them or something to get it through quicker? Yeah, I don't know.
That would work. So I think it's changed a lot, and so I kind of wanted to differentiate between what it was and what it is today. So correct me if I'm wrong, but I think probably over 10 years ago, maybe even longer, the client could actually submit a request for the ITIN number along with the actual request for the certificate, and would not have to provide the purchase and sale agreement on the replacement property. So it's kind of one fell swoop, and it was done. And today they have to get the I-10 first. Either they already have it or they have to obtain it. And then once that's done, then they can apply for the certificate, and they also have to have that purchase and sale agreement to attach.
Yeah. So, I mean, for the investors that are coming into us that didn't obtain an I-10, part of the 8288B, part of the application that goes into the IRS will be an I-10 application. You'll have to have both. And you're right, Bill. The guys and gals that are reviewing whether, everything looks good on the withholding certificate, are you really entering into a good 1031? Can we allow this money to be released? That department is different from the guys in Austin, Texas, who issued the I-10s. So you're right. It would be a delay if they hadn't issued, if the foreign seller hadn't already been issued an I-10, because the application first goes to the Austin, Texas guys, where it's going to wait 6 weeks, 8 weeks for an I-10 to be issued. And then it's shuttled off to Utah, where the 8280 withholding certificate guys are, and they're going to evaluate whether everything looks good. Do we buy that you're entering into a 1031? And what they will do is, because a lot of times you don't have the purchase agreement at the time you haven't signed it yet at the time we're sending all this stuff off before the closing of the original sale. So a lot of times what happens is you will wait for the IRS to sort of reach out to you and say, okay, we're ready. Can you now show us proof that the purchase agreement has been entered into, and that sort of thing? So they'll ask us to supplement the application, which is fine, but it gets tricky if, and this is a little maybe unlikely at this point, but what if they reach out to us, it's month 4, and they're like, okay, we're ready. Can you just fax us the signed purchase agreement, that sort of stuff? And what if the investor, the 1031 person, still hasn't entered into that yet? You hate to lose the window where you have their attention and they're ready to issue the certificate. That maybe was a problem of a few years ago and less so now. But anyway, regardless, it's a bit of a 2-3 step there, and you've got to be ready for all the. You really must be ready when they contact you. It's great if you have the purchase agreement entered into before the sale, but before the sale, the down leg. But it's unlikely. Maybe in your world, maybe they do have it a lot. I don't know. Usually, they're going to have to reach out to us. You can't. Another thing, it's so tricky to deal with these guys. You can't just 2 months later, you enter into the purchase. Well, I'll just send the proof of the purchase off, so they'll have that when they get ready. It doesn't work like that. That would just go into some void. You got to wait till they reach out to you, and then you supply it to them. So yeah, that's how it works.
Yeah, and I would think just from the transactions I can think of, probably most of them don't have a purchase and sale agreement at that point in time. It's just not ready. They're probably close, but it's just not ready. And so that would slow the whole process down if they didn't have it available to file with the original filing.
Yeah, definitely. It's tricky. You don't like to, you just would like to tell them what you're doing, as opposed to having to wait for their okay. And that's the part that sort of gets tricky, is having to rely on them to review everything and get back to you, and you're watching the clock and so forth. That's a little tricky. It's a trickier, and you need a escrow company to help and all that. So a lot of stuff to go. If you're going to try to get the money back if you're going to try to use the money that was withheld because you're a foreign seller, you're going to have to. It's going to be a little dance to get that through. And I've done it many times, but you always say, "Gosh, I hope it works. I hope that they're going to be responsive to me within the time frame I need." Yeah,
that's right. In fact, as you're talking, I was thinking of one particular client. It was a Canadian person who sold property here in California, and they tried to process all of this on their own. And the escrow company said, in this case, they would hold it for not more than 120 days. And of course, they didn't do it right, so it didn't get approved and ended up being backed up to where the escrow company remitted to the Treasury. And I think it's now been about 2.5 years, and they still have not received a refund. and the escrow company has been assessed a penalty for failure to remit in a timely fashion or what have you. And it's just one of those examples where you don't want to do this yourself because it all just kind of snowballed and became a nightmare.
Yes. Right. The money stuck and a penalty. Oh, what a mess. Right.
Yeah, it's just a horrible thing. Any other points you can think of that the listeners should be aware of for mandatory FIRPTA withholding?
I mean, there is, and I don't know what your experience in this area is, Bill, but there is this exception that says we don't require, the IRS gives this limited, really, I don't know how useful it is, exception where they say, okay, we're going to give you this finite set of one circumstance where we won't require you to ask us permission to not have withholding. We'll allow you to simply tell us that you're not going to have withholding. We're allowing you to give us a notice. No withholding is required. And I just don't know really. In my world, I think this is going to be kind of a tough window to thread, or but maybe you've had experience with it. So if we have it's right out of the regulations. If we have a foreign seller who's entering into what they call a simultaneous exchange. I don't even know really what the definition of do you know what the definition? I don't know what that. I mean, I'm assuming more or less the same.
Really simultaneous, then the sale of the relinquished property and the purchase of the replacement property would have to close on the exact same day.
Okay, great. So if you enter into a simultaneous exchange where no boot is recognized, so that's a tight window right there. Then the seller is allowed to, instead of asking permission from the IRS not to have to withhold, they're allowed to just simply notify the IRS they're not going to have withholding by sending in a notice of this event. But the problem is, and here's where I just don't know how possible this is if you look carefully, the notice requirement says a couple things. Number one, it says it must list the tax IDs of both buyer and seller. So right away, we would eliminate any scenario where seller went into the closing of the sale without having an I-10 to start with, right? Because we know then we could only apply, and then we couldn't put that on the notice because they wouldn't have it. So they already had to have one, and the buyer would already have to have one. And then, basically, without getting too technical, both it said the notice says sellers entering into a tax-free simultaneous exchange, no boot, and it's just issuing the notice. Seller signs it, and here's the part that I just am so skeptical about. Buyer signs it, and then buyer, apparently, if you read it literally, the buyer would be the party to send it in. So I just am curious, and maybe you know more than I, Bill, in this area. Is it really practical? Would a buyer actually sign? Because we all know under the underlying liability is the buyers if there's any screw-ups here on the withholding tax. In the real world, would a buyer sign one of these notices where the seller saying, I promise I entered into a simultaneous exchange, no boot, so I'm not sending in withholding, here's notice to that effect, I'm signing it, and here's my info, and buyer's signing it, and here's buyer's info. I just don't know. I certainly, as an attorney, I would be very, very reluctant to counsel a buyer client to sign that, because I'd be like, what do you know if this is, they're doing everything right? Why do you want to have what's in it for you to sign this notice? Right? I don't know, so.
I think you hit the nail right on the head. I mean, buyers aren't going to want to give up their social security or tax ID number, and they're certainly not going to want to sign off on anything like that. I don't think I've seen a concurrent closing that falls under this requirement in quite a while, but I could see other areas where buyers like, I'm not giving my social security number. So that's probably a rare occurrence, I would guess.
I think so too. I've been asked to, but I wouldn't, I didn't want to get involved because I was worried about what if things went south somehow and their buyer got tagged with a penalty and all of a sudden it was my fault for trying to sort of draft the documents. So I just don't know how practical it is in the real world. That's the best exemption. And then the other thing is, I don't know. And again, Bill, I don't know how common this is. I'm sure it happens a little bit. There's always this, we didn't even point this out in the beginning. There is an exemption from withholding generally if the sale is less than 300,000. Less than 300,000 is a big exemption, sort of a small sales exemption. For the small sales, 300 or less, there's a good chance there's no withholding to begin with. So that's, for the smaller exchanges that you might be doing, this may not be a requirement. 300 or less, and there may be no withholding. Or over 300, and the seller's going to try to issue one of these notices, and the buyer's going to fully cooperate. Who knows? I think that's almost impossible. Otherwise, there's going to have to be withholding, and the seller's going to have to live with either getting that money back the next calendar year, or trying to do one of these 82.8Bs and you get it back as soon as possible in a few months. Hopefully, be able to use the FIRPTA withholding money that escrow is holding on the replacement. But I would say have to have replacement funds at the ready in case that doesn't work. So
I always forget about that $300,000 exemption because it's rare now that we have an exchange under 300,000, but that's always good to know because in some states you've got rental property that is under 300, so it's certainly possible. Any other final words of wisdom?
Well, I mean, the only other thing I would say is it's, as we do this podcast, it's ending. No, I don't know if it's ending. We're in the second year of the coronavirus, and if you tried to do one of these last year, it would have been, by one of these, I mean an withholding certificate application, an 82.8B application. You would find it would have taken 10 months for them. If you had sent it in, if we discussed all this and you decided to send in this 82.8B application in April 2020, it would not have been approved because of the virus and because of all the problems they had at the IRS. They had offices that had a lot of virus cases. They had to close offices. A lot of the IRS workforce in this area transitioned and started working from home. That had its own bumps. But anyway, you would have found last year that it would have taken, instead of the 4 or 5 months we'd hope, maybe within the 6-month window, you would have found it would have taken 11. So they're working their way through the the backlog. And I would say they've gotten it down to like 8 months now. So they're working the way there's just such a long backlog, virus related. IRS having a lot of problems if you read about it at all, from compliance issues because of the virus. And this is no exception, basically. So at the moment, it's sort of a backlogged area, but hopefully the world, I hope, is getting more normal, and it will not last too much longer. And we can go back to the 4 or 5 months that we would expect this thing to take. Yeah.
Even 4 to 5 months is a tight window.
Yeah.
Well, this has been a lot of great information. Thank you so much for joining us on the podcast today. And for our listeners who want to get in touch with you, what's the best way for them to do so?
Email or phone. My email is Michael, Michael, and then at directs, that's DIRECTS, and then at LLP, LarryPaul.com. Michael at directs with an S, LLP.com, or they can just call myself, 760-898-3413, and I will get back to them and shoot the breeze about any of these issues. Yeah.
Terrific. Well, again, thank you so much for joining us. That was fantastic. And thank you, everyone, for listening to Go Ahead Ask podcast by the Exeter Group today. Our last episode was discussing Delaware Statutory Trust, or DSTs, if you're interested in that. Coming up, we're going to have one either this next coming or the one after that on Charitable Remainder Trust, so stay tuned for that as well. Again, we always encourage questions or topics, so go ahead and email us with any questions or topics you'd like us to chat about at ask@exeterco.com. Again, that's ask@exeterco.com. Or give us a call at area code 619-239-3091. Again, that's 619-239-3091. And if you loved our podcast today, please let us know. Subscribe to it, share it, comment on it, like it. We will respond to all of your comments. So again, thank you so much for joining us. We'll see you next time.
Thank you for listening to Go Ahead Ask with the Exeter Group. Join us for our next episode when we further unravel the mysteries of real estate.